Welcome to the AGS VAT Reverse Charge webinar. It's with great pleasure I'd like to introduce you to Chris Leng. He was a technical specialist at HMRC, dealing with complex areas of VAT for 25 years, and was one of 18 people who reported to the HMRC policy team on VAT. So Chris, it's a pleasure. If I hand it over to you, it's VAT Reverse Charge.
Thanks, Steve, and hello and good morning to everyone who's joined. The webinar obviously deals with, to give it its full title, the Domestic Reverse Charge for Building and Construction Services. Cumbersome title, so I'll refer to it as the DRC or the Reverse Charge. It's going to start from 1st of March next week, so very soon, and it is a major change in the way in which VAT is collected in the construction industry. It's going to have a big impact on the way in which VAT is accounted for, and the way in which sales are invoiced, and on the cash flow position for contractors and subcontractors. So it is important for all parties involved to have an understanding of the changes. And that's the purpose of today's webinar, obviously. It's coming in very soon. It's likely that you will already have made some preparations, but this is an opportunity to make sure you're familiar with the main details of the measure and to raise any questions. In terms of what we're going to cover, I'll briefly deal with just in short terms what the DRC is, when it's happening and why it's happening. Main part will be talking about the circumstances under which you must apply it and who it must apply to. We will then look briefly at how VAT accounting and invoicing will change and deal with a few problem areas or a few issues that we know have arisen already. In terms of what it is, I could start by giving you all this list of legislation that's put it in place. That wouldn't really be very helpful. So we'll start off looking to try and illustrate just about the main principle. And what we've got here is a subcontractor making a supply of construction services, £10,000 plus 2,000 VAT to the contractor. So invoices the 10,000 plus 2,000 VAT. Contractor pays the 12,000 across as customer to the subcontractor as supplier. He declares output tax of 2,000 on his VAT return and pays it to HMRC. The customer recovers that VAT on the purchase. It's a standard VAT transaction. It happens all the time. The big change under the reverse charge is that when the supplier is invoiced across, it's invoiced for £10,000. Although the VAT is due, that's not invoiced. It's put on the invoice, but it isn't invoiced to be paid. So the customer pays £10,000 exclusive of VAT. And then what happens is that the supplier there doesn't do anything as regards to VAT. They don't pay it across. That all happens at this end. The contractor, the customer, accounts for the £2,000 VAT on the purchase and also claims the 2,000 VAT input tax on the same VAT return. So it nils out and all the transactions are dealt with at that end. That, in essence, is the centre of what the reverse charge is. The responsibility for declaring VAT on subcontract sales moves from the subcontractor, the supplier, to their customer. Just over the next half hour, we'll look at all aspects of this in a bit more detail. When is it happening? Well, obviously, you know that it's happening very soon, next week on the 1st of March. It was originally going to be in October 2019, delayed, then it was going to be October 20, delayed by COVID. But it is happening next week, and that is going to take place. Question people often ask is, why is it happening? Isn't it just an unnecessary complication? The answer to that is that HMRC are bringing it in as an anti-fraud measure. Hopefully from these illustrations, we can quickly see why. At present, as we said, the supplier invoices that across, the customer recovers it. That's normal. The problem comes, the problem has come when this lot goes missing on this end, when the subcontractor raising the invoice for some reason doesn't pay. That could be because they've got insolvent, it could be because they just don't pay. Often it's because they don't really exist. The problem with this area is that organised crime gets involved, sets up phantom businesses that invoice VAT, then just disappear. Once all that's gone at that end, all we're left with is a customer who's got an invoice with VAT on, they recover it, and that's the loss to HMRC. Doesn't look much on one invoice, but if you multiply it up a lot of times, it obviously is a lot of money. The estimate was that in 2021, loss in the construction industry could be as much as 100 million. In terms of missing trade or fraud overall, and I'm sure you've heard of it to do with mobile phones, it's estimated the loss to the economy could be as much as 12 billion in a year. It occurs in a lot of places. That's why they brought it in. There's been some debate as to whether it's necessary. At this stage, it doesn't really matter because it is happening and it's starting next week. So it's a simple enough principle, but of course it does get rather complicated. It applies to most transactions in the construction industry, but not everything. And the most important aspect in applying it is understanding when and to whom it has to be applied. This is a summary of the conditions that have to be met. All of these have to be met. But once they are, the reverse charge, the DRC, must be applied. We're going to look at each of these conditions in turn to get a decent understanding of when the DRC applies. Some are straightforward, some are a bit more complex, but it is necessary to have a good understanding of all of them to apply the reverse charge properly and to avoid problems. So we're going to spend the bulk of this seminar looking at these in turn. So going across to the first one. The first one is that both parties have to be VAT registered. In a sense, it's fairly obvious because seeing why this is being introduced, if there's no VAT, there isn't any risk. And at the start of some supply chains, there may well be small subcontractors and businesses that aren't registered because they don't meet the turnover threshold. The point is that if either supplier or customer isn't VAT registered, then normal VAT rules and normal VAT invoicing apply if there's VAT at all. So the reverse charge won't affect them as supplier or customer. One point I would make here is that if for any reason you are not sure somebody's VAT registered, HMRC has now got a Check a UK VAT number system. It replaces the old European one, which disappeared with Brexit. There is a link to this, and it is very helpful. You can find the validity and the identity of the VAT number. And I've put a series of links at the end of this presentation, and that's one of them you could be able to use. So that's condition one. Condition two is that both the supplier and the customer are registered under the construction industry scheme, the CIS. CIS is basically a direct tax scheme which deals with income tax due from subcontractors, as you will know. But the reverse charge is designed to be very closely aligned with the CIS. So it only applies to transactions where payments are reported through the CIS, essentially construction operations for CIS purposes. So the reverse charge applies to most CIS supplies made between suppliers and customers, unless the customer is an end user, which is something separate and which we'll look at shortly. It is worth noting at this stage that re the CIS that while it is quite closely aligned with DRC, with the reverse charge, it's not identical. There are exceptions that you need to be aware of, and which we'll look at as we go through. Condition three is that the construction services that are supplied are within the scope of CIS and required to be reported under it. This means that most services supplied by subcontractors will be subject to the reverse charge, but inevitably there are a few complications. So we will look at this condition in some detail. It includes services that are reportable under CIS, as I've said. It means that all the construction work covered by CIS, which is summarised in HMRC's CIS guide, and again, I've included a link to that at the end. In section 1, it means all of that. As a general summary, it describes almost all work done on buildings and structures, basically any service that in construction, in common sense terms, could be described as construction services. And here is the list that's in the CIS guide. I certainly don't propose to go through all of these now. I'm sure you're familiar with many or most of them. But again, it covers most services that could be described as construction. To repeat, almost any construction operation carried out on a building or structure, from the initial clearance of the site to everything done to clearing up afterwards, and most things in between. It's sometimes as instructive to ask what services are not included, which ones aren't covered by CIS. And this is the list of those that's set out in the CIS guide. Some of them are obvious, like drilling for oil or natural gas or mineral extraction. Some are less obvious, and it highlights some areas that have caused some confusion, like the installation of CCTV or security systems, because the borderline can be a little bit blurry. But for this condition, that's the main part. Supplies of construction services under CIS have to be reverse charged. But there are some complications, as I said. As I did point out, the reverse charges of CIS are not identical in their coverage. CIS covers payments for supplies of services, but not for goods. With the VAT reverse charge, supply and fixed contracts, which include both services and goods, are subject to the reverse charge, because for VAT purposes, within VAT terms, they are a single supply. This can produce some surprising results, because if there is a service element in the supply, then the whole supply becomes subject to the reverse charge, even if most of the value is a supply of materials. Or where there are several services supplied and only one of them is a CIS service, then the whole, if they're supplied together, the whole lot becomes subject to the reverse charge. To illustrate this, just have a look at this little example. And what we've got here is a supply and fixed contract for some materials, whatever it is on a building site. In this case, the materials cost is 8,000. The installation services, the CIS services, are 1,000. So the total's 9,000. But even though the service is only less than 10% of the cost, so about 10% of the cost, the whole transaction will be a reverse charge service. So the customer will be responsible for reporting the VAT on the sale in box 1, and also claiming the VAT on the input VAT on the purchase in box 4, all on his return. The supplier here doesn't declare anything. All they do is issue a reverse charge invoice that would have the net value and information about the VAT to the customer. They've done it that way pretty much to make it for the sake of simplicity, I think, so that you haven't got two accounting systems having to be used for one transaction. But where there is a disregard, because where the value of the reverse charge element, the construction service, is very small, there is a disregard of 5%. So that if this part of the transaction is below 5%, then the reverse charge can be ignored and you go back to normal VAT accounting, with the supplier accounting for VAT on the sale and the customer claiming it back. Again, just take a look at this example. It's the same as the last one, but the value is slightly changed. In this case, the materials cost is 8,000 and the construction service element is 400. This means, therefore, if you look at the grey box there, that the service element is below 5%, it's 4.8% here. That means the disregard kicks in, and it means that we go back to normal VAT with the customer, the supplier declaring the VAT and the customer recovering it. In some ways, this possibly makes it a bit more complicated. It's been brought in just with this version of the reverse charge after the other ones. It's a new thing, just to take out transactions where there is almost no service. It's just treated really as a supply of materials. Just while we're here, there are a couple of other comments on these mixed supplies of materials and services, because for convenience, HMRC have agreed that where two parties have already had a reverse charge service between them on a construction site, that any subsequent construction supplies of construction supplies between them, those parties on that site, can just be treated as reverse charge, whatever it is, providing both parties agree. That is just a simplification they brought in where you've got multiple transactions going forward. They have also said that wherever there's a doubt as to whether the reverse charge does apply, then the default position should be to apply it, providing or the other conditions are met. Those are just two simplifications of some sort that HMRC have agreed to. Well, all right, all of those last slides have dealt with condition 3, the type of transaction which is subject to the reverse charge. We'll move on now to number 4. And that is that the supply we're looking at has got to be either standard rated at 20% or reduced rated at 5%. The reason for that is that there's got to be a positive rate of VAT. If there's no VAT there, as we've seen, there isn't any risk. The majority of construction services will be standard rated, but there are, of course, some types of construction work on renovations or conversions that are subject to the 5% rate. But the condition means that suppliers which are zero rated for VAT or which are VAT exempt are excluded from the reverse charge. And again, the reason is evident: there's no VAT, so there's no risk. One thing to note is that this does take out a large portion of the construction trade, takes it outside the DRC. The construction of new houses is zero rated. And as is shown here on this illustration at the bottom, the zero rating passes down the line of how many subcontractors there are. So supplies of construction services all the way up the line are zero rated. They're not subject to the reverse charge. There are a few exceptions, because there might be some standard rated services supplied in the course of new house construction. If they are, they would be subject to the reverse charge if all the other conditions are met. And also you get goods that are not normally incorporated in a new house being supplied, things like white goods, some fitted furniture, carpets, builders block items to those people that do this kind of work. Normal VAT would be applied there. This can be a bit complicated, so if it's a concern for you, HMRC's technical guide, to which again I've put in a link, will help, or please ask for advice. Going on to condition 5, that is that the supplier, the reverse charge rules do not apply to supplies from an employment business, even though this is something that would normally be reportable under CIS. Obviously, sometimes construction workers are supplied to construction businesses by an employment business. And where this type of worker is being paid by the employment business supplying them, then they are being employed by that employment business. And for that purposes, for the construction company to get using it, it's a supply of staff they're receiving, not a supply of construction services. And therefore, they're not covered by the reverse charge. Normal VAT applies. In contrast, where you have labour-only subcontractors, that can be a little bit difficult. Sometimes the terms of the agreement mean that what is being supplied is a construction service. So the reverse charge would apply again. Again, individual deals, it depends on the terms, and they can be a bit complicated. So it's something that's worth looking at. And again, it may be something worth asking for advice about if you encounter it. Okay, that's 5 of the 6 conditions. We'll come to the final one, which is quite an important one. It's an important part of understanding the operation of the reverse charge. So we'll look at it over the next few slides. You may remember that we said earlier that the reverse charge doesn't apply to end users. What these are businesses which are VAT registered and CIS registered, but which don't make onward supplies of the construction services applied to them. The end user, in short terms, is the final customer for reverse charge purposes. Reverse charge doesn't apply, normal invoicing does. It only applies where the person receiving the construction services, the reverse charge only applies, where the person receiving the construction services goes on to make supplies of those construction services to another subcontractor or a main contractor. So if we look at this illustration, you can see that we've got 2 subcontractors, the main contractor and an end user. The subcontractors each both receive and make onward supplies of construction services. So the reverse charge will kick in full time. But the main contractor, although they receive construction services, what they supply them on, but they supply them on probably in the form of a completed building, a constructed building. And the end user receives that, and they do whatever they will do with it. They might run the business from it, they might sell it, they might lease it. But the point is, it's the end of the construction supply chain, and normal VAT applies at that point. And that simply illustrates what I just described. This is what a typical end user would end up with. They'll end up with a building. All the construction services received will be used to complete it, and the end user can use it for their own business purposes. It's the end of the construction supply chain, as I said. This just illustrates the point I've just made, because sometimes, just to try and get it clear what it is we're talking about. From the left, you've got a whole chain possibly of subcontractors making supplies in to the main contractor, all subject to reverse charge. Excuse me. The main contractor then supplies these on to the end user, and they result in a new building for them. Now, they might be a supermarket chain going to use it for a new supermarket, a manufacturing company using it as a factory, a property company who's going to sell or lease the building, or a landlord just going to rent it out to tenants. Whichever it is, they will use the building as they wish, but normal VAT is charged to them because they are the end user. It's the basic meaning of the end user and the correct VAT treatment. So hopefully that is clear enough. You can go back and look at it if you need to, but there is another complication. Because in identifying end users, which is important, you need to be aware that some of the businesses which are not right at the end of the chain can also be treated as an end user, with normal VAT rules applying to them as well. These businesses are referred to as intermediary suppliers. These are businesses, again, registered for VAT and CIS, but they're connected in some way to the final end user. They receive supplies of construction services from main contractors and supply them on to the final end user, but it's accepted that they pass them on unchanged to the final end user, so that they, the intermediate supplier, end up being treated as the end user. And that probably just sounds completely mystifying being talked. It involves businesses that are connected, as I say, but it will be easy to understand if we just look at a couple of examples. So on this one, what we've got is the main contractor on the left, again receiving supplies of construction services from subcontractors with the reverse charge applying. They supply the main contractor. They make a supply on to, we call it DevCo. What it is a construction company that serves a bigger group. It's part of a bigger group, and it's the construction company serving them. That company in turn supplies those services, probably in the form of a constructed building, onto PropCo, which is a property company in the group, property owning company, that is the one that actually leases or sells buildings. Now, normally, DevCo would really be in the same position as the main contractor was in the previous illustration, as receiving and supplying construction services. But the difference here is that DevCo and PropCo are connected. They're part of this corporate group. And because they're connected in this way, under the terms of the Companies Act, DevCo is this intermediary supplier we've talked about for the purposes of the reverse charge, and they are treated as being the end user, and they get charged VAT in the normal way. Just to go on to another example, you can see the same principle here. In this case, we've got a landlord with a property let out to a tenant. They're connected because they're both subject to the same legal agreement as the lease agreement between them. The main contractor again receives construction services and supplies them on, in this case, to the landlord, who effectively supplies them on to the tenant, who will benefit from the works that have been done. Because they're connected, in this case, the landlord again is treated as an intermediary supplier to the tenant, who is effectively the real end user. Point is that where you're supplying a party that's connected in this way to an end user, you use normal VAT treatment. Reverse charge treatment ends at that point. So you can see from this, hopefully, that it is very important for a subcontractor or contract supplier of construction services to know when they're supplying an end user. If they are, they must issue an ordinary VAT invoice and account for the VAT. It means that if a contractor mistakenly assumes that they should use the reverse charge, then they won't charge VAT, and they could actually be at risk of being assessed by HMRC. HMRC have promised that for the first 6 months of the application, there will be a soft landing. They'll take a light touch. I have to say, from my experience of them, That'll probably mean if an error is found, they won't apply a penalty. I don't think it'll mean they won't apply an assessment. So you need to be aware of this. For these reasons, it really is essential to establish the nature of your customer and whether they're an end user. HMRC guidance states that it's only when a customer notifies a supplier in writing that they are an end user, the reverse charge does not apply. So the onus is put on the customer, and that's the written notification. Can be by email, it can be by letter, can be written in the contract. A suggested wording produced by HMRC is here, giving the written notification saying they're an end user, and that basically puts the responsibility onto the supplier to do it correctly because they received that. It's obviously important that these written notifications will become part of business records for both parties because they justify the treatment that was applied. So that sums up the end user stuff, and it sums up the stuff on the conditions. We've looked at those conditions. There they are again, and they're what you need to apply. There are some useful flowcharts being put in by HMRC. One is there for supplier, yes, no answers, telling you whether normal VAT applies or when you get to the domestic reverse charge. It is, I won't always say this about HMRC items, but that is a good flowchart. It will answer most cases. It won't deal with the difficult ones, but it will answer most cases. And I'd recommend you keep that and use it. Similarly, there's a customer flowchart they produced. And again, that's pretty good. It's for a customer to ask to see what should be happening to the charge they're receiving. And it does answer most cases. So I advise to have a look at those. Right. That completes our look at the when the DRC should be applied. That's the main part of this webinar. I just want to look briefly at how VAT accounting and invoicing should be completed. And we'll focus on this for the last few minutes. To illustrate the accounting required, again, I'm going to use usually simple supply chain. Subcontractor making a 10,000 supplied services, the main contractor who makes a supply of 100,000 to the end user. Now this next diagram's got a lot of arrows on it, but don't be intimidated by it. All we've got basically is a subcontractor making that supply, 10,000 plus 2,000, 12,000 pound on the invoice. This is before the DRC applies. For reverse charge is what you're doing at the moment. The main contractor pays the 12,000 pound across to the subcontractor. They declare the VAT. That's one of their return and pay to HMRC. The main contractor as customer recovers that VAT from HMRC's inbox 4 return of his return. And for the second transaction, the one in green, basically supply of 100,000 plus 20,000 VAT, exactly the same, 120,000 paid, 20,000 pounds output declared by the supplier, 20,000 recovered. You'll notice that it's nil net. This is HMRC down here. It's nil net for them. It comes in and out. They get their VAT on the income from the onward supplies made by the end users. That's the way that works. After the reverse charge, this is how it looks, because the big difference is here. Because the subcontractor is invoicing 10,000 across, there is 2,000 pounds VAT, but that's not charged, it's just shown as a notation on the invoice. They pay just 10,000 to the subcontractor, and in a sense, he's done at that point. The main contractor, in this case, who has received it, he now has the responsibility for both declaring the output tax in box 1 of his return and recovering it in box 4. So it goes around. For the transaction number 2 in green, it's the same as it was before. That's because this supply is to an end user, so normal VAT rules apply. And again, the VAT is declared by the main contractor and recovered by the end user. HMRC, again, it's still nil net VAT for them. And again, their income comes from the onward supply made by the end user. There's just here a couple of slides. Because of time, I'll just skip through these. All they do is summarize the VAT return entries we just talked about, both before and after, both for the subcontractor or supplier, contractor or customer. Have a look at those if you wish to afterwards. I'll move on to invoicing, because obviously the invoice has got to change, and this is an invoice that would have to be issued. This is one where somebody's invoicing for day works. The net value is shown there. the VAT is just shown subject to DRC because that isn't going to be part of the invoice. You'll notice that the net value less the CIS deduction is what is paid. Notation that goes on the invoice will be one of these things that's highlighted in yellow. Any one of them will do. It simply notifies the customer that the reverse charge does apply, so the responsibility is on them for declaring the VAT. This is a separate example where this is one with two suppliers at different VAT rates. And again, you can see the VAT isn't shown, it just says reverse charge applies. And on the bottom, it says that the customer's got to account for the VAT at the VAT rate shown. So it's their responsibility to calculate that. And that's what they would declare when they put their return in. So that is how the invoicing will work. I'll come on just very briefly now to the effect, one of the effects that it will have, and that is the effect on cash flow. For many subcontractors, the amount of VAT paid across that's collected by them has been available for a period of time as really quite useful working capital for up to a couple of months between the customer paying the invoiced amount and the VAT having to be declared. The extent to which this is the case will have depended on terms of payment, but for some businesses it will have been quite significant. Under the reverse charge, that's going to be significantly reduced because that's not going to be paid across. The effect will vary between businesses depending on the nature of their contracts and payment terms, but it is an issue. The greatest effect, whether it's significant goods purchases with significant input tax gains, it may result in the subcontract business having more input VAT on their returns than they're paying out, which would turn them into repayment businesses, repayment traders for VAT, usually reclaiming VAT from HMRC on their returns. And under those circumstances, it may be that it should be considered going onto monthly returns. It means more admin work, but it could help with the cash flow. If you want to do this, you've got to time it correctly and do it by applying to HMRC, but it may be worth taking some advice on how to do that. The cash flow effect is an unavoidable effect of the reverse charge. And if you're likely to be affected, then there is a need to consider how you're going to fund what is a shortfall. Okay, that's pretty much what we've got time for today. Just this one last point on tax point, when you've got to start applying it. With VAT tax points, it's either the receipt of payment or the issue of invoice, whichever comes first. So quite simply, if you've got a tax point before the 1st of March, normal VAT accounting. After the 1st of March, you go to reverse charge VAT accounting. If you have a contract spanning it with repeated payments, then the payments up to the 1st of March go on normal VAT accounting, and after they go on reverse charge. There are special rules for things like self-billing, authenticated receipts. A little bit more complicated, and again, it's probably worth checking the guidance or asking for some help. Okay, last thing, there's been some areas, if you're on one of these special accounting schemes, flat rate of cash accounting, we talked a little bit about labour-only subcontractors. Credit notes can be a bit difficult. It's too much for this session, but if you have any difficulties, then, as we say, contact AGS, you can get some help. That is the useful links page. You've got links to the technical guide for reverse charge, guides for suppliers and customers, the CIS guide, and there's the VAT number check I talked about. And those are all live links that you can use. Okay, well, I think that we've moved on right to the end. We might have some questions, so I'll ask Steve to say if there's anything there.
Yeah, well, thank you, Chris. I thought rather than maybe have other people asking questions, I know there's popular questions that come into to me. So, Chris, a couple of things. One point: what should people do if they receive an invoice from a small contractor who doesn't understand about reverse charge and is charged VAT in the normal way?
Yeah, I mean, this is something that's almost certainly going to happen with some of the smaller suppliers because they won't be terribly aware of these changes, and they will just carry on invoicing as normal. If you and the supplier are CIS, if they and the supplier are CIS and VAT registered, then providing the other conditions are met, it should be subject to the reverse charge, obviously. First thing is don't pay the VAT charged, and certainly don't claim it back as input tax. Although it's a VATable supply, they can't charge it, so that isn't valid. If you claim it back, it would be incorrect and you would risk assessment and penalty. if HMRC noticed it. It could be that the invoice is not for a CIS reportable service, which would obviously take it outside the reverse charge anyway. So it's worth checking that. But otherwise, don't claim the VAT. Go back to the supplier, talk to them and see if you can sort it out.
Okay. What happens if a customer notifies end user status to a supplier and it was wrong? What would happen then, Chris?
Well, as I said, the notification of end user supplier is a pretty critical part of this. HMRC makes it the customer's responsibility to notify that end user status if they want the reverse charge to come in. So if they give the notification incorrectly and they're charged normal VAT, then that would go through to them with VAT. They'd get input tax. If they claim that input tax, they would be wrong, and they'd be assessed by. That probably would be assessed by HMRC even if it was noticed. For the supplier, the conditions would they would just simply not declared that. They would have simply declared that wasn't that really, so that would have to be sorted out as well. Obviously, you can get the situation tied up to that if a customer doesn't declare end user status when they should have done, that's possibly what's going to happen more often. And for the customer's perspective, if they're an end user, it's their responsibility to do it. If they don't give that notification and the other conditions are met, then the reverse charge would apply. If they're not an actual an end user, from the customer point of view, there isn't much of an assessment risk because they would just have a reverse charge invoice, which meant they put through the output tax and input tax, and it was VAT neutral. By default, what would happen is the HMRC could assess the supplier for undeclared output tax. And one of the things is it may be a good idea for suppliers to cover this in the contract and warranty terms, so that they are entitled to pass the liability for VAT and penalty. That can be passed back to the customer who's made the mistake. So those are issues that need to be considered. That'd be a tricky one.
Okay. Another one is what happens with the design and build contracts. I know in end user status is particularly complicated.
Yeah.
So what happens with a design and build contract?
Well, with design and build, they're buying all design and build companies. They've got a contract. They're buying all kinds of building and construction service from multiple suppliers, and they'll provide a single supply to the client of a designed and built building. If all the other necessary conditions are met, the design and building company is not treated as carrying out any material alterations. So it can be treated as an intermediary supplier, so as an end user. But that would only be the case if the design and build company was a connected party linked to an end user, and therefore normal VAT rules would apply to supply brought in. If the design and build company isn't a connected party or linked to the end user in the ways we illustrated, then it won't be regarded as an intermediary supplier, and the reverse charge would apply to the construction services it supplies onto the end user. So a little bit complicated, and again, it would be worth looking at the details of the terms on those.
Just really, what happens if the customer doesn't declare that they're an end user status? What should they do? You know,
what should who do? Sorry,
if they don't declare that they're end user status. So obviously that causes a bit of confusion down the chain, won't it?
Well, yeah, I mean, obviously if they don't declare end user status, as we said just before that it is their responsibility to do so. It would mean that if they don't declare it, they're probably going to get an invoice for reverse charge purposes, which would simply be wrong. It would cause a problem for the supplier because it's the supplier who hasn't declared VAT, whereas if they're an end user, they should be declaring VAT. And so, as I said, under warranty terms, the supplier, if they've done their job properly, might be able to transfer responsibility for the assessment they're getting back to the end user, who actually is given responsibility for notifying that status.
Okay. Well, thanks for that, Chris. What I would say to people listening, that if they have any questions, to email me at steve.aston@agsaccountants.com, and I'll be working alongside Chris to formulate some answers. There are some complications. If you're uncertain, make sure you detail exactly what the profile of your relationship is with your supplier and customers. And we'll do our best then to, give you the best possible advice to deal with what is a very, very complicated area. So don't assume anything. If you need any help, we're here to help. So thank you very much, Chris, today for your time. And I wish you all the very best for the day for the rest of everyone who's listening today. Thank you for listening. Thank you. See you. Bye-bye.